Hello, investors. Thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today, I want to talk about MongoDB. I'm quite excited to talk about these results. MongoDB is a general purpose database platform. It put out a very strong result where we actually see its growth rates accelerating for the third consecutive quarter. So, I'm going to go through that, going to talk about its valuation, going to talk about some of the things that you need to think about when it comes to this investment. Okay, so I'm just going to jump right in here. So in the past several weeks, I've highlighted here, these are some of the names that you can see how they performed. This is companies with exposure to clouds and exposure to high growth rates. And I've highlighted names that have actually very little to do with each other purposely. I've highlighted CrowdStrike, Asana, Splunk, and Mongo. So these four names have absolutely nothing to do with themselves, but you can see the overlap. Investors are just pushing back and saying, no, we're not willing to pay such high multiples for stocks anymore. And as I said before, and I'll say it again, it's very important when the market is kind of having this pushback and throwing babies out to the bathwater. If you're willing to do a tiny bit more work, sometimes, not always, but sometimes you can kind of pick out something. Now, often the case, you have to kind of go in and kind of make the investment. You have to wait, like 2 years or so for something to actually meaningfully unfold. But right now, if you're willing to do the work, I think that there's a lot of opportunity out there. So 2 weeks ago, I said about MongoDB, I said, and you can check this on the Seeking Alpha. I said, investors are asked to pay 31 times forward sales for this business, which is far from the bargain basement price tag. Yet, it could be argued that this is a fair multiple for what's at stake. And you see the stock is up meaningfully after hours. So it's not that I kind of didn't wasn't Captain Hindsight. I said this 2 weeks ago. Today, I stand by that comment. So here's the thing. I mean, I was very surprised by this. So MongoDB's revenue growth rate for Q3 2022. Actually, before I go any further, so let me just remind you. So I'm talking about the fiscal year Q3 2022. I'm not talking about the calendar year. So those two are misaligned. So I'm just going to talk about the fiscal year. So Q3 2022 was up 50% year over year. So this, for a company that was grinding for approximately mid-30s growth rate to put out 50% year over year growth rates, everyone's just kind of blown away. That's why the stock is up so meaningfully after hours. So the guidance also for Q4 is pretty strong. They're clearly showing that unlike many other companies that are kind of like struggling right now to kind of put out growth rates after they come and they comp last year's strong period for digital transformation, this digital enabler is actually one of the few companies actually growing and accelerating for the third consecutive quarter. It's pretty strong that. So why MongoDB? So MongoDB is a database platform. It allows companies to use their databases. And what's particularly interesting about their databases is that they take in also a structured and unstructured data. So if you have a tweet or a spreadsheet or any type of data coming in, it's quite difficult in many cases to be able to unpick insights in that. But MongoDB allows the user to contextualize and search through that unstructured data. So this is really something that's quite compelling. What I wanted to highlight is the MongoDB Atlas. So a MongoDB Atlas is their cloud platform. And what's particularly interesting about the MongoDB Atlas is that if you are a business, you don't have to build all the infrastructure and have all the upkeep of their legacy enterprise segment. It's called the Mongo Enterprise Advanced. So you don't need that all to keep the infrastructure required for all that. So that's particularly attractive. Um, the other thing that I wanted to highlight is that I've said it before, and I'll say it again, follow the customer. If the customer is rapidly adopting a platform, that's enough insight that you get to see that this business has a very compelling business model. And you can see here for Q3 2022, you can see the green arrow up there. The number of customers adopting the platform was up 40% year over year. So, that's all the insight that you need to know that the business is clearly moving in the right direction. Now, this is what I said 2 weeks ago. I said 2 weeks ago, I believe that MongoDB Atlas will make up more than 65% of the total business. Now, I don't have the figures from the SEC filing, but this is what I can tell you. In the graph here, in the table here, this is the percentage of the subscription. So it's not really total business. So it's a percentage of the subscription, doesn't include some kind of value added and service revenue. So, but in any case, you can see here that the enterprise advanced, the legacy business, is now only 34% of the overall subscription model. So it's rapidly dwindling the percentage of the legacy revenue stream. So that will have less and less impact over time. How that slows down will have less and less impact compared to the Atlas, MongoDB Atlas revenue stream. That's the cloud revenue stream. The other thing that I wanted to highlight is that the detraction that I pointed out 2 weeks ago, where I said, okay, 2 weeks ago I said they're growing the top line, but you're not seeing a proportional increase in the bottom line free cash flow. I showed you this table here. I said 2 weeks ago, look, they reported in Q3 2021 negative 15 million of free cash flow. This time around, they reported, sorry, it was for Q2 2021, they reported negative 15 million in free cash flow. And then for last quarter's Q2 2022, they reported negative 23 million. So showing you that despite them growing on top line, they weren't seeing a proportional increase on the bottom line free cash flow. Now, look how it's improved so dramatically. You can see here. So for last year's period ending in October, there were negative 15 million of free cash flow. This time they moved to negative 9 million. So there's a meaningful improvement right there. And looking ahead for Q4, if you go back to Q4 of last year, they were at negative 9% operating margins. Non-GAAP, those are non-GAAP operating margin. Whereas now, right now, they're pointing towards negative 5% non-GAAP operating margin. So over time, right now, they've like seemed to have inflected higher. So it seems to be the case that they're now starting to see some improvement on the bottom line. And it's still not great, because you kind of would like to see some at some point in time this business becoming a free cash flow generating business. But anyway, let's move forward. So analysts following stock were previously expecting the stock to be up 31% next year, 31%. Now, on the back of growing 50% this year and putting out mid 40s guidance for Q4, I suspect that they may grow next year by 35% rather than the 31 that analysts expect. So that puts the stock, that kind of implies that they'll probably print out 1.1 billion in revenues over the next fiscal year. So that puts the stock right now after the pop at 34 billion, which puts the stock priced at 31 times forward sales. So at 31 times forward sales, it's not particularly cheap. Okay, it's not a cheap stock. There are plenty of names out there right now after the sell-off in the past few weeks that have seen their multiples meaningfully compress. It's really a buyer's market. I mean, it's one of the best opportunities if you are really a long-term investor. If you're willing to kind of sift through the rubble, there are a lot of opportunities. If you're just a tiny bit patient and you buy in something now and you kind of sit on your hands for about 2 years, I think that there's so many opportunities. I mean, it's really a buyer's market. It's quite exciting to be investing right now. So yeah, as I just highlighted at the start, MongoDB is one of the few companies actually a digital enabler that's actually digitally enabling businesses and rapidly growing their revenues and actually accelerating. So it's quite exciting to see that. But as I said already many times, so many stocks at a 52-week low right now. Why would I even bother paying 31 times forward sales? And I have much better opportunities that I'm investing in right now. So if you're interested in finding those out, don't forget to check out my marketplace. It's called Deep Value Returns, where I help you become a better investor, help you think through and highlight exciting investment opportunities. Okay, thank you so much for listening.